Thanks very much, Francis. Yes, well, everything's in the green at the moment, European markets as well as the local bourse. However, the rand still not looking too good. There are a lot of factors, local factors, that are driving that at the moment. And as you mentioned earlier, Francis, global markets really looking to see what comes out of the US non-farm payrolls. Those are the jobs numbers out a little bit later. If they're better than expected, it could mean more dollar strength, in turn meaning emerging market currencies like the rand being on the back foot, and ultimately it could mean interest rate hikes in September, but this is all guessing games, so we have to wait and see. Let's take a look at the indicators. By Warwick Lucas. He joins me from Galileo Capital. Thank you very much for joining us, as always.
Pleasure.
Good stuff. Would it be fair to characterize markets, while they're in the positive, as trading cautiously ahead of the US non-farm payrolls?
Yeah, I would say that's a fair assessment. I mean, it is going to be quite an important bit of data, especially considering that the Fed has indicated that it's on a somewhat hiking footing. August is a tricky data time, though. I mean, it's holiday data. Holiday data is always somewhat unreliable. If, of course, you have a very strong number, then that would prompt the Fed to hike. So, yes, there will be some watching, even though it's a very, very noisy data period.
Okay. The rand obviously continues to struggle, partly because of local factors. We've heard that Cabinet has decided to commission a judicial inquiry into why 4 of the major banks decided to blacklist the Guptas, who are complaining that they have to pay R1 million a month in financial fees to foreign banks in order to pay their staff and so on here at their South African firms. How do you think this has affected markets, if at all?
Well, it's certainly messy. I mean, in the long term, the rand rate is determined by inflation. In the medium term, it's determined by commodities. And in the short term, by political positives and negatives. And, I mean, quite clearly, something like this indicates that, well, if a relatively nondescript company in the broad South African context can get a commission of inquiry into why someone won't have a current account with it, well, then, frankly, that's more evidential of state capture than otherwise. So it's really as if in Pretoria they've decided they've got nothing useful to do.
All right. Now, following Future Growth's decision to suspend funds to state-owned enterprises, this has had an impact on SOE corporate bonds, hasn't it? I mean, we've heard about the yields on Eskom's bonds rising. Without getting too technical, just explain about how bonds actually work. And we also know that Sanral will be one of the first SOEs next Wednesday to go to market looking for money from the market, and therefore that will be a test of people's appetite for SOEs.
Okay, so in terms of SOE bond issuing, I mean, basically, a state-owned enterprise will issue a bond against its balance sheet, and typically you'll find on some formula or other the state will effectively act as some kind of reinsurer. So, for example, in the Sanral Act, it states quite clearly that states is not allowed to allow Sanral to go bust. So it is lender of last resort when it all boils down to it. Sanral, of course, is in the interesting position that they have been particularly annoying in a broad context a lot longer than anyone else has been. So one would expect that it would be business as usual for Sanral on this bond issue. But that said and done, I mean, the way in which we've seen the whole Eskom saga mishandled is suggestive of weakening corporate governance balance at SOEs. Investors will look at Eskom and say, well, if you can sell bad coal to Eskom, you can sell bad tar to Sanral. So who is watching the hen house? And from that point of view, I think broadly it's quite negative for SOEs. Yeah.
Look, we were having this conversation yesterday following the decision of Future Growth the day before on Wednesday, or the announcement about them withdrawing funds from state-owned enterprises. You know, this issue, will there be a trend? I mean, some of the issues that they identified were issues around governance, and they say that if you have decent fiduciary sort of perception, you as a fund manager will actually hold back before continuing business. So therefore, if that's correct, wouldn't the rest of the industry be looking at the same issues, and could we see a trend in behavior?
Well, absolutely. I mean, in the normal context, for example, no one in their right minds would really lend money to the likes of South African Airways, for example. It's quite clearly the implicit guarantees that have been given are what keeps things rolling there. So, one can extend that and say, well, fine, just how exposed could one possibly be? And I think that's the big rolling punch up at the moment, that Treasury said enough on SAA. I mean, they've just thrown good money after bad for years and years and years. I can't think how much over 20 billion in wasted loans have been extended in the last 10 years. And Treasury has quite rightly said if they can't make it on their own, why fund them?
It's quite interesting that despite Finance Minister Pravin Gordhan insisting that the chair, Dudu Myeni, be removed, just today we hear that Cabinet has reappointed her and 11 other board members to SAA.
I do hope they'll have a commission of inquiry into the many billions that have been thrown down that black hole, yeah.
Moving on swiftly, platinum. In recent days, we've heard a couple of platinum CEOs say that the supply-demand balance within the platinum industry is getting tighter. So there's less platinum sloshing around, and this is partly due to a lack of investment in the industry for the past 10 years. And so they think the tightness will result in higher platinum prices. Can we expect platinum prices to be exceeding gold anytime soon?
Well, that might be a little bit of a stretch, but certainly a nice tightening to come there. I mean, the gold industry actually alluded to it, specifically Goldfields, last month, when they pointed out, well, for quite a few years, given the weakness in prices and the pressure they've had on local costs, they've had to go after high-graded material the whole time and basically ignore the low-grade. And the effect of that over the very long term is that you run out of higher-grade material, and then you have to spend a lot on capex, or you have to go after low grade or simply shutter. So very much the same phenomenon. Sounds like it's been coming through with platinum. They have had somewhat more of an oversupply issue. I think that's quite clearly going to be coming to an end. So one would expect, yes, in the longer term, better platinum prices, sure, but at what cost? I think maybe you might have to start looking at some changes in the actual combination or the cocktail of the PGM catalysts.
Okay, all right, we're going to leave it there. We've run out of time. Thank you always for your time. That was Warwick Lucas. After the break, Francis has more business news for you.